Hi guys, good morning. It's Vinod from GrowWealth here. Hope everyone is all right. This is the stock market analysis and watchlist update for the last week. And today is the 28th of November 2021. It's the Sunday. Welcome for GrowWealth analysis, stock market analysis and watchlist update. The market has been quite interesting. It's taken a turn for worse after the Thanksgiving Thursday holiday. Due to the concerns of the new coronavirus strain Omicron coming up in South Africa and spreading across the world. And market has already been extended and quite jittery. It was looking for some reason to pull back. As we know, in our last week's market analysis, we spoke about how the Nasdaq is beyond 6% extended beyond the kind of 50-day moving average, which is usually the point where it starts to feel the strain and turns over downwards. So the pullback is expected. It wasn't totally out of the blue, but what kind of worries is the extent with which it happened. So there was a very nasty sell-off on Friday, and many of the indices have closed quite negatively in terms of their relationship with the moving averages. We'll go into greater detail in a minute. So you have to look at the price action, the volume of it, the breadth of how many new highs and new lows are happening, and that has been weakening recently as well. Although the Nasdaq and S&P has been going up and up in the recent weeks, the participation has not been broader. So there were more new lows compared to more new highs that was contributing to the market moving up. So it can't sustain like that. And we saw that in the last weeks, particularly Friday's market action. It was half a day and it closed really badly with just half a day of trading. So next week is going to be really interesting. It points towards further downside. So caution advice. I don't think we should immediately jump into action thinking it's buy the dip situation. It may or may not be. The way it acted immediately with that news, the extent to which it dropped down last week, I would be really cautious. So without further ado, let's now to share the screen for this stock analysis. So this is the put call ratio. And as you can see, it's at 0.92. It is in between the 1 and 0.8. So it's in the neutral zone, meaning not a lot of people are bearish at the market still. The bottom and the top is usually kind of usually happens at the extremes. So it's still in the neutral zone, which signifies there's more downside possible. That is the take-home message from this put call ratio. Let's go back to the candlestick and the usual analysis of the indices. So I'm going to take off the previous annotations and we're just going to look at the price action to make sense of it. Let's start with weekly and then move on to the daily. This is S&P 500. On the weekly, it reached all-time high, went sideways, and came naturally to the T line, which is not bad at all. On the daily, however, it had a gap down on Friday with heavy volume pullback. The volume is not showed in SPX, but if you go to the SPY, you'll see the volume has been, let's look at it. SPY, so volume is incredibly high, gap down, and it's a bearish kicker symbol. So this is quite bearish. At the very least, it's likely to touch the 50-day previous resistance level here at 454. Let's go back to the SPX index again. So 50-day or previous resistance here. So this is quite bullish, bearish. So further downside is expected on the S&P 500. Excuse me. Moving on. Nasdaq, similar picture in all of the indices, but Nasdaq and S&P 500 was bullish previously and holding up despite the other indices going down, but this is also starting to break down now. It had a nice piercing candle here on 24th, but on the 26th, the Friday, it gapped below where it closed, below the T line, and with high volume, it closed below 21-day moving average. So previously 21-day moving average acted as support. Now it's broken down. that. So this low here from the 10th November could act as a support if the market finds some buying, but the overall sentiment is quite bearish in my view, and it's likely to have further downside. And I wouldn't be surprised if on Monday the market reaches the 50-day moving average on Nasdaq, depending on how strong the selling is. Something to be seen. Similar to S&P 500, that's this previous resistance at 15,700 level. It'll be interesting to see whether that holds and find some support buyers coming in at that point. Moving on. Why is it not going? This is Dow Jones Index, more bearish than the other two indices because it gapped below 50-day moving average and high volume sell-off, well below the 50-day moving average. And looking at the weekly, again, it closed below the 21-week moving average. It did that here, but the very next week it came back. But it broke above this previous resistance and then it pulled back quite quickly within that range. So it shows this could be a false breakout, a fake out, which might signify further downside. So the same weakness is shown in the Dow Jones as well. Moving on, that's the New York Stock Exchange Composite Index. Very bearish. Tried to go above, but 21-day T-line acted as support and crashed below all of those key moving averages, finding some support at this previous resistance level, if you can see that at this point. So this is a support zone. One would expect, well, if the market, if we want to have a bigger bullish market, then we hope that this previous resistance acts as a support now, but further downside is likely because of the overall market sentiment. But it is right sitting at the support level, right at that level at this point. This one is the IWM, which is the ETF for Russell 2000. Again, very bearish, high volume sell-off, but gap down on high volume sometimes can signify exhaustion. But if you look at the weekly, it's not broken down. It's just come back to the previous channel line it had. So if the market continues to grow weaker, this could be just the start of a bigger downtrend. There are some support levels close by, 50-week moving average right there, which also is the downward channel support level here, between 200 and 210. It'll be interesting to see what the indices and the broader market does at that level, because it held support here. Whether it provides support again and consolidates or continues to roll over is something to be watched. With the overall concern about coronavirus and the broader market selling off, Bitcoin also sold off, as you can see. And everyone was bullish on Bitcoin. And the week before last, everyone was saying, well, it's going to 98,000 end of November. It's going to over 100,000 by the end of December and things like that. But everyone is bullish. That's when it tests the patience and goes the opposite direction. So it pulled back about 17-20% now, still above the 21-week moving average, not even reached this level. So in the longer term, it's not bearish. But if you look at the daily, it is below 50-day and key moving averages. We used the dual MACD strategy, and based on that, I've exited. It gave an exit signal right here at around 62,000 mark. So using that strategy would have saved traders this kind of agony of kind of losing, waiting for it to recover. So I'm watching for the price to stabilize and recover so that the dual MACD strategy gives me another entry point at some point, hopefully soon. So the as you heard the gist, it's not looking great for the whole market, and certainly not for our stocks either in the watch list. There are some stocks which I'll mention later on that is holding up nicely or bouncing in view of the recent coronavirus news, but that we have to see whether that follows through, whether there's a new trend emerging or not. Right now, most of the stocks that we have on our watch list are either pulling back to its natural support level, like in this one QS, to the 50-day moving average and previous resistance level, or whether they are totally crashing down and out. So that's what we need to be watching. If you have any of these stocks, it's important that you risk manage, book any profits, adjust stop losses, look for the major support resistant levels and adjust your position accordingly. If you have some cash at the sideline and wanted to deploy the cash for medium-term swing trading approach, wait until the market settles down. If you're a long-term investor and have a good company on your watch list that you want always to add, I would still say wait for the next few days to see what happens. Or if you don't time the market, you just invest dollar cost average over a period of time. Yeah, have a strategy to regularly deploy some money to those selective stocks and companies that you believe in for long term. And this crash and the pullback might provide you a better entry point for them. So for QS, it's still about the 50-day moving average, but it's pulled back quite a bit, about 30% from the top here. That is quite a bit pullback. It is a volatile stock. It's a relatively newer stock, pre-earnings, so that is to be expected. But it is in the trending sector as well with EV sector. So I hope that is find some support at 50-day. But right now, it has to prove itself. Trupanion, along with the market, it pulled back, but finding some support at 21-day moving average. So it had a positive day, one of very few stocks that was positive on the day, on Friday. So we had to see whether that holds the 21-day. If it consolidates here for a few days while the market is crashing, that shows good relative strength. So you need to be watching for those stocks that is showing good relative strength, which means that it's falling less than the overall market or its counterparts, or gaining while the others are falling. So have a watch list, and then when the market recovers, it is those stocks that showed good relative strength will be likely to be the new winners coming out of the woods. So keep a close watch for those stocks. And Trupanion seems to be resisting some of the downtrend. Airbnb, it did crash, but on last 2 days when it did open down, it immediately found some new buyers. So price is going down, but the blue candle here shows that that's been buying soon after it opened lower. However, it is going down, though it is below the 50-day moving average. If you look at the weekly, it's come down and retested the 21-week and 50-week moving average and pulled back a little bit. I would like to see that it finds some support here and recovers. It's still forming that kind of IPO after the initial advance IPO base here. Maybe it wants to create some handle. Hopefully that happens soon, depending on the overall market condition. And because of the COVID concerns, Airbnb and travel sector are hit a little bit. But it's encouraging to see some buyers coming in when it gapped down. ARB, let's go to the weekly. Gives a better picture. So this is the mining, cryptocurrency mining stock, because the crypto also kind of pulled back in the last few days. This is still trying to form that base, and yeah, so still it seems like it's still kind of forming that kind of cup here, maybe forming a base here. If it goes above, convincingly goes above 153 pence, that'll be a good signal, a bullish signal. Roblox, move to the daily. So Roblox did gap up on Friday quite a bit, but then it was met with profit taking, but not on high volume. It's on lower volume. So among the stocks, this is one of the strongest stocks. So it gapped up on earnings, and that low is still held. It had a profit taking couple of days here, distribution day. T-line acted as support and moving up. So it's another profit taking coming with the market weakness, but this is one of the stocks that's showing good relative strength. So I'm watching the stock to see where I can add a little bit more if the market condition improves. Woozy, it is a false breakout. It's kind of bad looking chart on the daily. Looking at the weekly, yeah, it closed the week low volume, which is good, but it closed the week below the key moving averages. So I'd want to see it proves itself by recovering all of those key moving averages and coming back about at least this level here, $13 or more, so like the support, the resistance here above that level, 13.50. So right now, not looking good at all. And if you have any of these stocks on your watch list, keep it in a separate watch list for further kind of penalty box kind of things. Or if you do have this stock and either at break even or some positives or even a loss, it is not a bad idea to cut them short and wait until the overall market recovers. I will of course follow this watch list as per the plan, but this is the time to cut your losses short. Shopify, one of the great winners, is doing reasonably well on the weekly. You wouldn't be worried about anything at all, but with overall market, you'd want to kind of position size accordingly. On the daily, it did gap up and came below T-line, still above the 21-day, but it closed very poorly on Friday. It's likely to gap down on Monday, and hopefully we'll find some support at either 21 or 50-day moving average. It's not giving us any new entry points here, but for long-term investment, something to hold if you have it already. Amazon. So this one gave a good entry point, I think, last week or the week before on the MACD strategy. And it also tries to break this year-long consolidation. And it did that, but then the poor market condition has pulled it back along with it on low volume, however. So it's about the key moving averages on the weekly. On the daily, it's about the 50-day, but below T-line and 21-day. So further strength would be identified if it holds, if the 50-day moving average holds. But right now, it's watchful wait. TTD, right? This is another positive stock. So although for the day it is minus 2%, but you can see it is still above the T-line. So it's about key moving averages. It held the earnings gap up and bull run really nicely. It's a natural consolidation to the T-line on low volume. So the moment market stabilizes and finds some support and recovers, this is very likely to find more buyers and further upside because it's showing good relative strength. Etsy, another relative strength stocks, almost on all-time high, near all-time high level. So nothing to complain about this, except that it is met with profit taking, a bit of exhaustion gap up and profit taking on Friday. So if you hold the stock, keep hold of it, adjust the profit risk accordingly, stop losses and stuff. It is a great long-term investing stock for me. Sedge, Solar Edge on the solar sector again, EV sector, solar is really doing good. About 50-day on the weekly, as you can see, about key moving averages, but it is kind of given a weekly bearish engulfing candle, meaning more turbulence ahead. But on the last 2 days, despite similar to LBNB, despite opening down, it is met with some bias. So there's some hope here, some relative strength shown on these names. So these are the stocks that will probably come to the top of your watch list because of the relative strength. So it needs to recover above the T-line for any new entry points. Plug Power, again, alternate energy sector. Reasonable shape compared to some of the other stocks, still above this previous resistance, which sits now exactly at the 50-day moving average. The price is around 21-day moving average. If the market continues to be weaker, it's likely to be dragged down along with it. But right now, it is consolidating, which shows some relative strength. On the weekly, though, bearish piercing candle and most engulfing, it's likely to consolidate or pull down a little bit before it finds some support and recovers. So this is another relative strength name. MP on the mining for rare earth minerals sector. Low volume pullback here, about 21.50, right at the T-line close, about key moving averages on the weekly. The all-time high price here around somewhere between 45 and 50 is likely to act as a support, is acting as a support. So it's kind of maybe it formed a handle cup and maybe creating a handle right here. Maybe a week or two on sideways consolidation breakout on high volume will be fantastic. So if it presents that, so we can identify an entry point when the handle is broken out of using a cup and handle pattern. So if we draw a line, descending trend line from this top and connect this top here, so we'll create a downward trend line. And if it breaks above 44, 44.6 and so on, that might be a good entry point to consider with tight stop loss around, well, it's not that tight. It's about 10% stop loss at around 40.3. But it needs to prove itself first. That's the point. That's the theme for all of our stock. Fresinello. So this is to kind of make use of the gold and silver sector that is showing some sign of life coming back. But along with everything, that got heated up quickly and then pulled back along with the other rest of the market as well. But it's finding some support at the 50-day moving average. And the weekly, as you can see, it's above the key moving averages, but 21 is still below 50. And maybe in the next couple of weeks, it's also likely to come up if the price didn't crash. So for long-term gold and silver bulls, this is something to keep a watch on. And similarly, the next one, which is the KL, which is also a gold mining company. This one looks a little bit more worse than the Fresinello because it's below this low here. But it seems to find some bias coming in on Friday, high volume, and just above the break-even price. So some bullish indication on the daily, but on the weekly, it closed below its 50-week moving average, which is not great. So this one still needs to prove itself to us before we can enter. So that's a loose consolidation channel zone here. So if it goes above 44 and 45 mark on consistent tight action high volume, that will be quite good to consider entering. But right now, this is not looking good, but some green shoots. Unity Software. This had wonderful run from all the way from here in May to here, almost tripling in price. And now so it's a normal action. When something triples in 5 months, it will have to pull back and consolidate for a while. And that's what it's doing. Despite the market violent pullback, this is not seeing as violent a pullback in this one because it's finding some support at 21-day moving average. And that is also the previous resistance here at 175 level. So if this consolidates sideways while the market is struggling, that shows good relative strength. And there are some green high green volume days coming up as well. What bothers slightly is there are a couple of 2, 3, 4 high red volume days in the last 3 weeks as well. So that is something to be seen. If there are more distribution days, that is high red volume selling days, then that shows further kind of turbulence and resistance for the price to go up. You want more green days and high volume to support your price action and bullish move. So if it were to pull back, that it will still be natural to the 50-day moving average, or even if it goes sideways and the 50-day catches up, that again offers good risk-reward ratio for new entries. And I'm watching this one to see if it offers me a good entry point later. So that concludes the watch list stocks that we had. Some good names for relative strength to keep a close watch on, like what are the other ones that we mentioned? TTD, Sedge, and some of the EV names, Plug Power, MP, and things like that. But there are some new trend that might emerge if the coronavirus became rampant and spoils the market. So the Zoom stock, Zoom video communication, that bounced nicely around 10%. So it was down in the dumps for the last year, ever since it reached an all-time high at 588. It then came down to, where did it come down to the low of 195 on the week starting the 23rd November, right after the earnings. And then with the new coronavirus and possible kind of lockdown happening again, remote working stocks are finding some buyers. So it gapped up about 10% and then immediately found some sellers to close at 5% level for the week. If it finds some buyers again, it could consolidate and might offer us a new entry point. But right now it's below all key moving averages. It could be oversold bounce or the news driven bounce. It is still bearish stock, so something to watch, not immediately to jump. But if you believe in this company for long-term investing, which I think this is a great company to invest, one could do so for with many years horizon. But the stage analysis approach by Stan Weinstein would suggest that this is probably in stage 4 downtrend. So not a good place to enter at this point. So, but something to watch. The next one is Peloton. That's the exercise bike type company. And that also found some buyers, a bounce after really being crashed from the top, 5%, but no entry points yet. What is the next one? BioNTech. So this is the vaccine stock, isn't it? Pfizer and BioNTech. So this had a huge buying volume and gap up about 15% on Friday because of the COVID news. But even a few days before then, it was going up. Whether it catches another bid with the booster vaccines and all the doses and stuff, who knows? But this is showing some relative strength, something to be mindful of. The same goes for Pfizer, gapped up 6%. Moderna, mRNA, yeah, 20% up move. So these are the COVID-friendly, COVID beneficiary stock, if I may put it like that, of finding some bidders and everyone else is being sold. Something to watch. Don't want to be reactionary, but if you're quite nimble, you can make some good moves here. But general advice is stay cautious, have some money in the sideline, book some profits, take some losses early, so to prevent bigger losses if the stock is breaking down. Have a separate list for watch list. Have a separate watch list of high relative strength names. Some of them we spoke about today. And when the market settles down, they are the places to be in. Hopefully this gives you some ideas for what to look out for. Play it safe, happy learning, successful investing. I'll see you in the next week video. Bye-bye.